and just a whisker away really from the 25,000 mark, and then we petered down from there. Having said that, there's nothing really to write home about when it comes to the global handover overnight, much unlike what we had last night, or rather from Friday night. It's been pretty much tempered across the global screen as well. Nothing really for the Dow, just a smidge of a green for the S&P as well as the Nasdaq. And now the 2-year yield, or rather the 10-year yield in the US, that's standing at that 4.17 mark. The only thing is that there has been a bit of a smidge up when it comes to the volatility index, right, Nikunj? And even for us yesterday, for instance, the volatility did spike up when the markets gave up those morning gains.
Yeah, but that's not the decisive, point. Aisha, look, it's easy to understand that this market is enjoying a huge bout of momentum and a big push from liquidity. And I don't think there is any reason to think that in the near term, we are in for any kind of a sharp reversal or markets are likely to look otherwise. Why am I saying that? Well, the reason why I'm saying that, the obvious part, which is that there is still so much of money on the sideline that every decline has just been getting gobbled up. B, globally, crude is down, equities are up. So it is not that, global cues which were threatening to, let's say, move against you late last week or early last week, they are also, creating a problem. And see, the market now is perhaps looking for what could be called as the next trigger, and that next trigger I think is not there. So markets are saying if there is no trigger, if both the local events which were centered around election and budget, that is behind us, and if that has not derailed the market, that just gives the underlying confidence for participants, now whether it is long term, medium or short term, to stay invested. So there is no point in trying to call a market top when markets have ability to surprise an extent. Global cues are strong. The market and declines have been bought into. What you are seeing perhaps could be called as a typical churn. And that churn, I think, is a function of earnings season. And that churn is a function of the way how flows are moving.
Oh, yes, indeed. But having said that, we're still about just 0.7% away from those life highs for the frontline indices. And when we talk about the mid-cap index, just a whisker away. In fact, yes, as we flagged off, we did attempt to surpass that 25,000 mark, and it was the PSU banks that really proved their might yesterday. And you had that index up about 3% or so. So clearly, it was the bulls that continued to remain in control. And although we're very close to those life highs for the broader end of the market, yesterday at least, Nikunj, they fell quite sharply from the top of the day.
So, Avan, I will not read too much into yesterday's reversal. DIs were buying and FIs were selling, and the market, in a sense, has done nothing in my book to indicate that we are in for a trend reversal. One. Second, what you actually may see is that the market may gradually start seeing some kind of an sectoral churn. And I think the sectoral churn is visible, which is that banks are clearly underperforming. IT had that deep swell or a dinky bounce, and that has not translated into reality in terms of a trend. C, you are definitely seeing within the PSUs also outperformance and underperformance. You are seeing a good, nice comeback coming back in some of the consumer staples and FMCG stocks. So for those who are watching the show, if you really want to look at one trend, I guess the trend is that sectoral churn is evident. And within that sectoral churn, I think you really need to migrate. For example, suddenly cement has become on the pedestal. Suddenly you've got Birla group of companies which are coming higher. Oil marketing stocks have started outperforming. So you need to pick up some of these small sectoral churns which I think are very powerful, and that's where I think you are likely to pick up your spots. But in general, the basic approach has to be, don't be in a hurry to call the market top. For market to peak out, something has to happen locally or globally, and the fact that markets have come on the right side of the two events in terms of price action, it just gives you the confidence that the ability of the market to shrug off bad news, the liquidity on the sidelines and the flows, those factors I think are intact.
And the one segment which really has been at the focal point from ever since the election verdict has really been FMCG, because this is one sector wherein the rural end of the market, the demand there of course was lagging. But looking at the commentary, while Unilever has been a beat, as has been Colgate, that's not quite been the case with Nestle, which of course does not have a large rural exposure. But the fact that, Unilever has come out and said that rural is rebounding for them, premium is intact. For Nestle, they're saying inflation woes remain. For Colgate, they're saying that rural growth once again is improving and premium continues to grow. So really, I think, the question is whether in this sectoral churn, is FMCG really turning around, or was it just a tactical trade that you saw post-elections?
Aisha, I'm actually amazed when I see what is happening in FMCG. I mean, not every company is hit out of the park. And I'll give you an example of a company which we've stopped speaking about, and that's Patanjali.
Yeah.
Now, what is happening in FMCG is that a lot of these so-called rural dadas are actually losing market share. When Colgate getting market share, it is gaining market share from other competitors. It is not that in oral care, a deeply penetrated category like oral care is going to be having impact in terms of demand per se. So what you're actually witnessing in FMCG is that A, the market share matrix is changing. B, in terms of the FMCG companies, migration is happening, which is, Tata Consumer is suddenly doing much better than what, let's say, an HUL is doing, or Dabur is finding, huge advantage largely because of the product category of Marico, which is a niche hair care company or oil company that is finding some takers. So FMCG, I mean, Asian Paints has not done well, but Colgate has done well. So there is no universal phenomenon which you could say that, okay, rural recovery means all FMCG is up. Rural downturn means all FMCG is down. I think FMCG is becoming very, very stock specific, but it's an interesting place where right now you may actually see some opportunities. And I think whether it is staples or some of the under-owned or some of the disregarded, consumer niche companies, I think there is second half looks much more promising. And the underlying feel-good factor, which is that inflation, the base effect has kicked in. Monsoon, there is plenty of rain. The slowdown which happened because of heat wave and because of the election cycle, that seems to be coming out. Government is definitely doing its bit in order to boost the consumption. So the setting on the table is that some of these stocks have potential to outperform. See, with FMCG, you always have to make a case that will they outperform or underperform. And I think there is a case for some of these stocks to outperform now.
Okay, fair enough. That's the view coming in on the entire FMCG basket. But Nikunj, it would be interesting as well to understand what exactly the strategy should be for the day. Also keeping in mind the fact that we have the FOMC outcome and the fact that we have seen crude oil prices as well falling nearly 2%. And you've got those tensions in Israel-Hezbollah escalations.
Yeah, but despite that, crude is down.
Yeah.
And, whatever has happened in terms of the US earnings season and, inflation concerns getting diluted, US markets have not really taken it hard, so to speak. So for me, I think the strategy is simple, that you got to be, trend is your friend, you got to stay with that trend. The ability of this market to shrug off bad news, I think, is quite incredible. And if you have long positions, you should not cut long positions just because stock prices have gone higher, one. Second, there is a definite sectoral churn which is evident, which is what you need to focus on. And I think that sectoral churn is clearly evident. For example, within PSU, suddenly PSU banks are up, suddenly defense stocks are taking it easy. So there are a lot of these sectoral churns which you really need to focus on. Third, I think for next 2 or 3 weeks, there is no large calendar event, which means that more than news, the technicals would be at play. And then I think markets, in a sense, will start looking at some of the so-called beneficiaries of good monsoon, whether it is FMCG, whether it is two-wheelers, or for that matter, whether it is niche rural focused companies.